All the buildings you see here, right behind me, are part of a neighborhood called Dubai Marina. There are a total of around 200 residential towers in this place. And this is where it gets interesting. As you can see, not all of these towers are 100% completed yet. And when you look at square foot prices in dirham per square foot, there's a huge difference in pricing for the uncompleted buildings compared to the existing buildings. Have a guess. Property prices in Dubai Marina are currently 2,600 dirham per square foot, or around $7,600 per square meter. That includes new launches, under construction buildings and existing units. What would you guess is the difference in prices for under construction apartments versus existing apartments? Here are 4 choices. We will reveal the answer in 5 seconds. The correct answer as of April 2025 is number 4. Yes, that's right. New property launches and under construction properties are almost double the price per square foot as existing apartments. You can verify this information yourself on the website DXB Interact, which shows detailed transaction data for all Dubai neighborhoods. Looking at this chart, we also see that there has been a significant price difference between off-plan and ready units for more than 10 years now. Now, this information may come as a surprise, as real estate developers and real estate agents commonly argue that off-plan properties are more affordable and thus are supposedly better investments. Let's find out the reasons behind these price differences and analyze the data for other neighborhoods and property types. In Dubai Marina, you could make the argument that off-plan properties are significantly more expensive due to a recent extension called Dubai Harbour. In Dubai Harbour, you find only oceanfront towers, many of which are luxury branded developments, such as the various Address Hotel apartments and the W residences. The existing stock of apartments in the marina, however, are not always oceanfront and can be somewhat run down, feature outdated architectural styles, or in general are not upmarket. As pretty much all apartments under construction in Dubai Marina are high-end, the higher prices for off-plan properties do make sense. However, that's not the only reason. Have a look at this chart. This shows property prices in dirham per square foot for all of Dubai, not just Dubai Marina. Citywide, across all properties, off-plan prices are still more than 20% higher than for ready properties. Now, why is that? Is it because new developments are generally speaking located in better locations, similar to what we saw in Dubai Marina? Not really. In fact, we have seen a majority of launches citywide in recent years on the outskirts of the city, such as in Jumeirah Village Triangle, Jumeirah Village Circle, Arjan and Demak Lagoons. Other neighborhoods, which similarly wouldn't be considered prime locations as of today, saw large numbers of launches, including Dubai Islands, Maritime City, Creek Harbour, Chopra Heartland 1 and 2, and Dubai Hills Estate. The number of launches in prime locations, such as Palm Jumeirah or downtown and DIFC, has been limited. We see the same price differences in suburban affordable neighborhoods, such as Dubai Silicon Oasis, where prices recently spiked, but mostly for off-plan units. Or Jumeirah Village Triangle. Within neighborhoods such as Jumeirah Village Triangle, there isn't much difference between individual plots, so there must be other reasons for the price differences. Please keep in mind that especially during the COVID years we had few launches, and thus data in those years isn't necessarily representative, due to the small sample size. Could one reason for the price differences be a changing mix-up of villas and apartments? For example, could it be that villa prices are more expensive and now more villas are being constructed? These are square foot prices for apartments only, citywide, with the typical price difference between off-plan and ready units. And this chart is for villas. Not only are villas cheaper per square foot on average than apartments, but their price difference between off-plan and ready units is smaller, and price momentum is better. Villas are mostly located on the outskirts, where land prices are lower, thus the lower prices. And the price gap between off-plan and ready units is smaller as well due to a current shortage of ready villas. Nonetheless, we've still not found out why off-plan properties are so much more expensive. Could it be that, as suggested before, off-plan properties have better quality? Yes and no. If newer units on average were always of higher quality, we should have seen an increase in property prices between 2017 and 2020. After all, the properties that were sold off-plan before 2017 were completed a few years later, usually before 2020. If they were of much higher quality, they should have increased the average of ready property prices a few years later. But between 2017 and 2020, property prices declined. So the average price for ready properties was clearly not pushed up by completions of pricier off-plan units. In terms of luxury or branded residences, you can make the argument that today's new launches tend to be higher positioned, such as the various Ritz-Carlton residences, St. Regis residences, and Four Seasons residences that were launched in recent years. Such projects were rare in the previous decade. Such projects do offer better quality, finishes, and services, and thus of course should cost more. However, they only explain some of the higher prices after 2021, as before 2021 there were hardly any such luxury launches. Furthermore, in terms of construction quality, many of the buildings launched before the great financial crisis in 2008, particularly those by EMA Properties, have exceptional quality. Structures such as Old Town in Downtown or Standpoint may be slightly outdated in terms of architectural styles, but their build quality can be higher than that of newer buildings. Now, is quality better for recent off-plan properties or not? Let's have a look at Dubai Creek Harbor, a master plan community where every building is built by the same developer, EMA Properties. There's some variation between individual buildings here. However, the mix-up of higher-end and mid-range units here has been fairly consistent over the last 10 years, meaning this is the perfect neighborhood to look at price differences between off-plan and ready units, adjusted for quality. And while we again see a price difference, it is much smaller. Last year, in 2024, the price difference was 7.5%. When you think about the additional risks you are taking as an investor when buying off-plan, the price premium makes little sense. There's the risk of years-long construction delays. You won't know the exact quality of the finishes. And you can't earn any rental income during the construction period. So why does this price premium exist, even if we adjust for location, developer, and quality? There are multiple reasons. Reason number one is that more than 60% of buyers in Dubai are non-residents. And for them, buying real estate directly from a developer off-plan is much easier than buying on the secondary market. You don't need to inspect a property, you can choose from lots of availability in a catalog, and the process is fast. You just need to wire the developer your funds, without even having to visit Dubai. Buying a ready unit on the secondary market requires you to pay by local check and also be physically present during the contract signing. The reason payment is done by local check is to prevent fraud, as you would usually hand over the check at the same time the property is transferred over to you. If you don't have a local bank account and don't want to visit Dubai, you can still use an escrow service and hire a power of attorney to help you facilitate the purchase. However, these obviously cost thousands of dollars extra and create extra work. There's also the real estate agency fee of 2% that you have to pay for properties on the secondary market. For off-plan units, this fee is paid by the developer. The other main reason is that off-plan properties have payment plans. That's beneficial if you want to buy a unit but can't pay for the full amount and don't want to get a mortgage. Even with just 10% down, you can still apply for a Dubai 10-year gold visa. And the payment plan provides a leverage effect. If on average you have paid 50% down, over a 4-year construction period, your leverage effect is 2 times. That means if property prices go up by 20%, your return on invested equity is 40%. The issue here is that leverage effects also work the opposite way. Should property prices go down, your returns on invested capital will be significantly worse. In addition, you are at somewhat of a disadvantage, as an off-plan property is higher priced than ready units. For an off-plan investment to work out financially, it is important to choose units that have strong positive price momentum, as we showed earlier with the chart on villa and townhouse prices, which keep rising. And in unique cases, there are lesser known off-plan projects with more attractive pricing. This is where we can help. Our company, the Dubai Navigator, is the only 100% independent real estate analysis firm in Dubai. We don't sell real estate. Instead, we analyze the market for the best investment opportunities. We offer a variety of paid consulting services that start from selecting the right investment property and investment time to help you navigate the entire purchase process. We also handle visa applications, international tax optimization strategies for individuals and businesses, and company setups covering the UAE and international markets. Contact us today at thedubainavigator.com for more details. Thank you for watching.